Hello, everyone. Welcome to a KE Report webinar produced in conjunction with Focus Communications. My name is Cory Fleck. I am your host for this webinar, and I am featuring UberDoc. This is a brand new company, just went public on the CSE under the symbol APPT. I am joined by Sean Kearney, the CEO, and Dr. Paula Muto, the founder and chief medical advisor and chair of the board. Thank you all for tuning in to this webinar. This webinar is going to be a broad overview of the company, and you also have the ability to ask questions. I direct you to the chat or Q&A function within this webinar platform. I will be monitoring that throughout this webinar. I'll interject some questions as Sean and Paula work through this presentation, and then at the end we should have some time for some Q&A. We really want to get as many of your questions answered as we can. If we don't get to any of your questions, or if you are watching the replay of this webinar, you can always email me directly. My email address is fleck@kereport.com. Happy to get those addressed for you after this live webinar, and also for future interviews when I have Sean and Paula on my show, the KE Report. Really looking forward to getting UberDoc in front of all of you. This is a very interesting story. It's a new story. It's in healthcare technology. It's kind of a blend of all of this. So without further ado, Sean, Paula, thank you very much for joining us. Sean, why don't you kick us off? A little background on yourself, please.
I'll provide the summary version here. Sean Kearney, CEO of UberDoc. I've spent the last 15 years in the digital health space, focused on issues very relevant to UberDoc, that in resolving access to care, price transparency for the healthcare system in the United States. Invested in a handful of companies as a venture investor. A few of the better known successes include Lemonade Health, which was sold to 23andMe for over $400 million. And then a few others in the virtual care space. More recently, I've been focusing on creating value as a key growth executive for mid and late stage healthcare technology startups. I've done that with CHS Therapy. We grew the business to a bit over 300 million before selling to a strategic. And then also with Genomenon, a software as a service platform, selling genetic testing programs in the clinical and pharmaceutical spaces. But more recently, I'm excited to be CEO of UberDoc, where over the last year, we've been building out the core team and preparing the company for listing, which recently we achieved on the CSE and are now trading under APPT. With me today, I have Dr. Paula Muto, the founder, the visionary for what we're building, and I'll let her say a few words.
Great. Thank you. And thank you, Cory, for having us here today. And greetings to all the investors out there. Some of them I might know and some of them I don't know. But I hope you do know as well by the end of this. So I'm a surgeon. I'm a vascular surgeon. I do general surgery. I'm the daughter of a surgeon. I'm married to a surgeon. I'm the sister of a surgeon. I have two uncles that are surgeons, all in Massachusetts for a collective century. So you might say that it's the family business. So I started UberDoc 10 years ago to disrupt the system, or rather restore the system, to make it easier for patients to find a specialist. That's pretty much it. Very, very simple concept. So I'm thrilled to be here. And I'm thrilled to the fact that this company started as a nidus and an idea. And with a lot of perseverance, it has now entered the public markets and female founded, which is always exciting. So I'm going to turn it over to Sean, and we're going to tell you all about our wonderful company.
Thank you, Paula. So I think a lot of folks hear and see headlines that talk about the U.S. healthcare system as being, problematic or having various pain points. But our view is quite simply that the healthcare system is broken here in the United States. The marketplace for patients and physicians is illiquid and inefficient. Patients are not getting the access to care that they need, and physicians are burdened by the ecosystem that ultimately makes their practice more problematic. So when you start to dive into the problem on the patient side of the equation, the first issue is that of wait. So where we liken ourselves to have the greatest technology and the leading physicians around the world, you're waiting more than 90 days to see a specialist. That doesn't include that 23-day wait up front to get to the gatekeeper of the primary care physician that gets you in the queue for the specialty appointment. If you look at the data nationwide, there's not a strong corollary that determines how this wait time comes into effect. Based on specialty, geography, really things that you might expect in terms of population density or typical supply and demand factors don't necessarily explain the story. We think it's structural. So the other issue for patients then, in addition to access to care, is cost. So the rising costs, on average 7 to 8% per year, outpacing wages, outpacing many other factors, is driving towards a system that's unsustainable. Employer plans, where about 95% of Americans receive their healthcare coverage, are also continuing to push up 7.5%. What's happening with the ACA is it's also changing the economics for a lot of Americans to access care, and ultimately creating price increases of over 100% on average. So what you see here is an additional number of uninsured, pushing up to about 31 million projected here in the next year. And a lot of this directly relates to how we think the right solution is to address our broken healthcare system. On the flip side of the coin, for physicians, they're spending over a third of their time on administrative matters for their practices. That's 5 hours per week dedicated solely to insurance paperwork. And as a result, it's continuing to squeeze these small independent practices. A lot of this relates to the founding vision of Dr. Muto, and it's a good time, I think, for you to explain more about how we came into fruition and the current state of affairs here in the United States.
Sure. So healthcare it's a hassle, right? We know that it's hard to navigate its increasing complexity. But if you look at the really big picture, healthcare has become one of the biggest suppressions on wages in the United States. We spend more on healthcare in the U.S. than any other developed nation. Let me say that again. We spend more on healthcare than any other developed nation, yet we do not have the results. We are now one of the lowest in terms of longevity and mortality, and we have a lot of complications even with children. So this is a really huge statistic to understand. And the government is very interested in figuring this out, because the other piece of this is that because we spend so much money on healthcare, and a lot of that money is federally derived, is that Medicare is going to be bankrupt in about 2033. So people want to make a solution to this healthcare issue. A few months ago, I actually was paired with an economist from Hopkins, and we wrote an article that ended up in USA Today talking specifically about how wage freezes, how the economic downward pressure on wages is affected because of the huge premiums that our employers are paying in healthcare, and that's not sustainable for the growth of an economy. So you want to just put the next slide. So we see a lot of headlines in the news they talk about direct health care. They talk about patient-centered care. They talk about health savings accounts, which are tax-deferred accounts that have increased significantly year over year and continue to increase. So the federal government wants people to put money aside and away to save for their healthcare costs, to pay them directly. The President of the United States talks about removing the middleman. And recently, I actually did get appointed to a federal health committee on healthcare, health and vital statistics, which is an important committee because they're looking for people to reform the system. The last time this happened was around the time the Affordable Care Act went into play, and there were some pretty good people sitting at the table. The people that are on my committee are pretty amazing, including someone who's considered the godmother of healthcare consumerism. So this is a very exciting time, and there's a lot of influence and everything from the top that the government needs to solve this problem, and they are looking for direct pay and transparent solutions.
Paula, just another question on that in terms of this governmental side. It almost sounds like it's getting away from the government-supported healthcare, or is this maybe a new angle for government-supported healthcare?
So the government taxpayers fund healthcare. Well, that's whether it goes through a private insurance, sure, whether it goes through an employer, or whether it goes directly through a Medicare or Medicaid product. The taxpayer is funding about 80%. And so that is sort of reality. The issue is that the government doesn't want to manage all of it because they can't. And as people are getting over 65, they look at their budget and they say they can't do it. So the simplest thing to do is much like, the days of 401ks, right? You want your employers to say, here, take the money, invest it yourself, and then you can reinvest it in your own healthcare. And that's where the push is, to give the money instead of to the third party, give it to the patient and encourage patients to save their own health savings and utilize those resources for more of a direct pay model.
Okay, thank you.
Thanks, Paula. So what we see here, there is a common thread to all of the issues that we've touched on, and that is the participation of the third party payer in the United States healthcare system. The mounting barriers that are coming from increasing insurance copays, rising deductibles for the healthcare consumer, referral requirements, and ultimately creating an unsustainable path that we need to break from the bottom up. So our position, our solution is remarkably simple. You cut that third-party entity extracting value from the system and connect patients directly to healthcare specialists across the United States. Our upfront access gives a pathway that removes the referral requirements existing in the existing model and ultimately gives expedited access to care, transparent prices for patients, but then on the doctor side, reducing that administrative spend.
Can we just stop there for 1 second? Because I think this is key to understand is, one, how are you able to offer an upfront pricing? It seems like many other people can't. And then how do you keep physicians engaged? So Sean, you first, maybe upfront pricing. How can you offer this?
Yeah, so quite simple. The physicians are so tired and exhausted from all of the work that they have to do to get compensated for the services they provide. So what Paula did over the years is campaign and get these physicians to buy into this idea that, hey, we're providing services. Why can't we do this directly to the people consuming them? Why can't we be transparent about the prices and provide immediate access? And so it's the proposition that underlies the whole system that gives physicians the willingness to open up their schedule and prioritize direct pay patients.
And then Paula, keeping physicians engaged, I guess that's because you're providing a revenue stream for them, a consistent one?
So obviously I get how doctors think and I get how offices work, and doctors are pretty much creatures of habit. So what we did when we built this platform was really simple, not to disrupt their usual workflow. Doctors might see patients, say, every Tuesday and operate every Wednesday. You just put a seat in their waiting room. Say, you start at 9, maybe 8:45, maybe one at noon, maybe one at the end of the day. Make it convenient and accessible. It's like a house seat at a Broadway show. It either sells or it doesn't sell. And that's basically so they continue to do their work. They walk into every examining room and see a patient. They don't know if it's an UberDoc patient or not. But when the patient leaves, it means that they're getting paid immediately. So 1 or 2 UberDoc patients in their waiting room per week will pay their front end. If you have a group of 5, it could pay the nurse practitioner. If you have a group of 10, it could pay the salary of a physician. So this is about cash flow, Cory. It's about just a simple equation of cash flow. So that's why it's easy to get the doctors to adopt, because we are not disrupting their normal workflow.
Okay, so there's no guarantees there. You're not saying you need to give us these certain times. It's work it into your schedule and you get extra money.
They decide, but we make it very easy so that it's sort of like, again, like a house seat at a Broadway show. I always say that example because, you should do the show 8 times a week, but there's 2 seats always put aside for critics. They either fill them or don't. The interesting thing is now we go back to our doctors and say, you have to have these seats because there's a whole army full of direct pay patients out there that are going to need to book with you in a more convenient way. And we want to provide that mechanism to manage those seats in your waiting room.
Okay. Thanks for addressing that. We'll get maybe even a little bit more into the revenue model later, but continue on there, Sean.
Definitely. So the patient experience is immediately you're removing the requirement to see that primary care physician. So 23 days off the bat, that wait is gone. You have your price fully baked when you walk into that appointment. You know exactly what you're going to pay. There's no surprise billings following the appointment. And then, of course, you can navigate as a healthcare consumer with booking either in person or virtual services. Leverage the technologies that we've built into the platform to help inform you better as a healthcare consumer, and ultimately provide the benefit of financial security without having to be concerned with the impact of the insurance company. For physicians, what you're doing immediately is reducing the cost structure by about 30%. So they can see more patients, earn more revenue, and get better margins out of practicing healthcare. On the more qualitative side, what you hear when you talk to a lot of these physicians that are delivering appointments for UberDoc is that they feel that they've returned back to the state of medicine that their parents or their grandparents practice in. They feel more empowered and less minimized by the system as a cog in the wheel, pushing buttons or responding to additional reimbursement requests and claims denials. So ultimately, what we've created is a multi-market platform. We have a unique value proposition that we're servicing both to the healthcare consumer, that are the patients that we get through either a direct-to-consumer, D2C, an employer, or our partnership channels. But then on the other hand, we have the opportunity to monetize and offer a more unique value of services to the physicians and specialist networks. So what you have here is not unlike a Lyft or an Airbnb or a bookings.com. We have the opportunity to drive revenue and create a flywheel effect that is not as opportune in your traditional platform.
Just a question on this specialized network then. There's a lot of things that people go to the doctor for. So are there certain limitations of what, I guess, customers of UberDoc can request from your specialist network?
It ranges. A big part of the interest that drives consumer demand to our platform is purely time. So folks that are well aware of the wait time to get into the primary and then get into the specialist of 90 days plus, to be able to do that next day or same week is huge. So folks may have insurance already. They may have even seen a primary care physician, but the idea that they can book next day for a fixed and known price really drives a lot of the interest. Most of the format that we've provided service for today is in consultation. But we have product bundles and a cash pay list for most of our physicians that we're utilizing as well. But the majority of our interest comes from that initial consultation today. Does that answer your question, Cory? Cory, we lose you? I'll assume yes. Silence speaks loudly. So just carrying forward, where we are today, very quickly coming into the business, I recognize the value to leverage AI capabilities with the problems that we're solving. If you think about what we're doing, we're completely disrupting the model and creating a new way forward for healthcare consumers to interact with the system. One of the first things that needs to be solved is that gap in education. So if you don't have to see a primary care specialist who often guides you in the type of care that you need, what better than to have an AI triage system to help coach you or at least give you informed advice based on what you're seeing and how you might approach a specialist appointment. So really what we see is AI as an enabler for our platform, our technology, and both for the consumer, solving this education gap that now exists with our new way forward, but then also with the physician and providing additional services that can help optimize their practice, such as an AI-informed marketing engine, which is in prototyping today, or other value-added services that can be wrapped around our package as the direct pay facilitator for physicians. So where we're going from here, we now have the AI triage platform in terms of AI built into our platform. We have methodologies for taking our physicians, our small independent practices, and giving them tools and scale economy that they otherwise wouldn't in the form of our AI capabilities, and really trying to create a flywheel effect of feeding demand into the system, but at the same time continuing to increase and support supply in our physician network. The way that we drive revenue today is through our direct consumer visits. We charge a percentage of that appointment, 20% on average. The typical revenue per visit for the physician is $200 to $300, and then 20% of that is directed to UberDoc. Through our channel partnership programs, we have varying contracts that net 30 to 50% of appointment revenue that have a much greater range in gross revenue potential, but ultimately giving us that $150 to $600 per visit revenue. And then lastly, we're continuing to build our value offering in the software as a service platform for the physicians. Today, we have a handful of our physicians that pay for a suite of services that provide them with telemedicine capabilities or other practice management tools to support their business.
Sean, one question on this. This sounds like a couple different channels here. In terms of the flat fee charged, that's upfront, as in once somebody books or when they're looking to book the customer, they know what that fee is, the range in there. It's not a range, it's an actual dollar amount. Is that correct?
Yeah. As a marketplace, we really just want to support both the physician and the healthcare consumer coming together. So our model is physician, specialists set your price, what's worth your time for your individual practice. That's upfront and known when the patient books, specific to that practice. And then immediately after booking, there's an amount reserved to make sure that the appointment follows through. So there's a no-show deposit that's taken. And then ultimately, the economics flow through this percentage per visit model once the appointment is successfully completed.
I think the important thing is that the physician sets their own price. And when we went out to the doctors originally, we CMS guidelines, right? To set the price, you have to be above Medicare to be legal, right? 1.25 or so. And that's where it came in at. But we also encouraged our doctors not to set it too high because they weren't going to use any overhead to collect this money. In other words, they didn't have to bill insurance, pay a billing service, pay their billing secretary, pay a third party. There's so many different people involved in the processing of a transaction through insurance that the physicians understood that the margin would be good, even though the price looked a little bit lower than what it does on their current charge master. So that's how we were able to get the transparent pricing. Okay,
that's straightforward. Now, what about the physician SaaS subscription? You mentioned you can offer a suite of tools. This clearly is just more focused on the physician. Are you growing this side? What does this side of the business look like?
Yeah, so we've evolved our monetization model over time. Initially, we started off as a SaaS offering for physician practices. So providing them access to the marketplace and charging them a license fee for that access. We've moved away from that largely in effort to build out the network and have been quite successful. But today we are continuing our product roadmap. It has services that we believe will increase the value of this software as a service offering. So where we might be paying $15 to $25 per month today, we see that potential going up as high as $200, if not $1,000 per month, based on some of the products in motion.
So do these complement each other? Is it a way of once, I guess, physicians are in the system and they're getting paid through your platform, do you find they sign up for this SaaS subscription or is it more separate?
So historically, yes, they have signed up for the SaaS subscription. So they have recognized the value in the services offered, that is access to the network, but then also the tools and services to provide direct paid care. So yes, they are today. We have pivoted away from the subscription model in terms of selling it uniquely in the last 3 years and more to the effort to accomplish this, Cory. So we've invested heavily in expanding our network of specialists. Today, we have over 5,000 covering 55 specialties, east to west coast. And so this was the effort that we undertook that pivoted us away from the software as a service model and into more of a freemium type marketplace to build supply and ultimately monetize it.
Okay, thank you. That makes sense.
So zooming out real quick for folks outside of the U.S. boundaries, the United States is the largest consumer of healthcare services in the world. About a third of the total spend of $12.5 trillion comes within the boundaries of the United States. We range from 4 to 5 trillion in services today in spend, depending on how you slice the pie. But what you're looking at here is this $1 trillion segment of physician and clinician services that UberDoc has the opportunity to disrupt. So with just a slight penetration, 0.01% of that capture nets you to about a $500 million company. If you then start to analyze the market a little bit further and zoom in, coming from more of a global perspective into what we have the opportunity to capitalize on today, you start to adjust for things like ability to pay, insurance coverage or not, age demographics for those that are more adaptive of new ways of healthcare services. And you get to about $1 billion of serviceable, obtainable market. If you then take a different approach and view just in terms of what we contracted through our channel partnerships, which we'll get to shortly, we have the opportunity to execute on $7.5 million of contracted appointment revenue. So the way that we approach our specialists and our physicians is that we're giving them opportunities. We're facilitating your direct pay access. So we do that through a few ways. One, the direct to consumer channel. So we build demand from the direct to consumer space. That is this burgeoning effort of the healthcare consumer that's been driven by some of the changes to the insurance industry. The other verticals, we work with large providers, state and federal entities who have a backlog of examination needs, and we leverage our UberDoc network to service those appointments. The third bucket is in the direct pay format and direct primary care specifically. So there's a growing market for subscription services to primary care, and we solve a big challenge for them to go beyond primary care into specialty care. We are the missing puzzle piece for their healthcare continuum for their patients. And then lastly, in the employer segment, as I mentioned earlier, about 95% of Americans receive their healthcare benefits through their employer relationship. And so we have a number of partnerships and pilots in process to penetrate from that vertical. If you think about the competitive landscape, I think the two most relevant things to consider are first in the D2C scheduling. So think of a bookings.com for scheduling with doctors. There's a company today that's private known as ZocDoc. They've raised a good amount of capital, close to $500 million. They provide direct booking services to patients through their marketplace platform. However, they're doing it through the status quo format where insurance is the main issue, the friction point, and the barrier. Patients still have to supply their insurance information. That physician they're trying to book with still has to be in network or has to accept that type of insurance coverage. So it's status quo, but with a bookings layer built in. The other way to look at it is at the opposite end of the spectrum. So who today is only focusing on cash pay services? And most of those are what I'm framing as the niche D2C platforms. So there are a handful of companies that have tremendous traction in their specific therapeutic area or care vertical of providing healthcare services in a cash pay format. Those have, things like gastrointestinal health or reproductive and sexual health. These are companies that have done well in improving the business model in their vertical. Nobody, however, has the comprehensive 55 plus specialty access coast to coast for direct cash pay healthcare services. And that's our most unique differentiator.
Now, some of these competitors, I've gotten a few questions on these competitors. Any idea what their networks are like, what their, I guess, physicians are like, or even their customers, what their size is?
Yeah,
I was going to say, in terms of just the network, because when we built UberDoc, of course, ZocDoc already existed, and they'd been in the marketplace for a little bit of time. So what differentiates UberDoc from ZocDoc from the network standpoint is we're physicians. That's it. You have to be an MD/DO. You have to be board certified in a specialty to be on the platform, which includes specialists of primary care. In other words, you had to do a residency in family practice, neurology, psychiatry. That's who's on our platform. ZocDoc actually opened our network up to people like chiropractors, people that are like non-physicians and so forth. So they have a little bit of wider group. So we stuck closely to specialty care, and that's the biggest differentiator in terms of our network. Hence the word Uber was chosen because we sit above the average doctor.
Okay, I get another question that ties into this. Someone was asking about, do you access or does UberDoc have access to facilities for imaging studies? Long wait times for CTs, MRIs, mammograms, etc. Is that something UberDoc offers as well?
So we've had multiple conversations, and we do have a partnership with Green Imaging. Green Imaging is in about 26 states, and they do exactly that, direct pay radiology care. The hard part is that when you do anything with imaging, you need to have an order form. So you have to think of things that can be self-directed, like those mammograms or like those calcium scores. But more and more testing, because the deductibles are so high, are going to fall to the patient anyways. But that's so the answer is yes, we have partnerships, but it's hard to put certain things on the platform that require an order to be accomplished.
Okay, interesting. That makes sense. So it's really just getting in front of the doctors initially to address, really, it sounds like a wide range of issues, but it's getting that access to the doctor first and foremost.
We're the first date.
Yeah.
We're the first date, which is the most important step in definitive care.
Absolutely. Okay, thank you.
I think just real quick, Cory, so what Paula mentioned, I think is important as a differentiator for UberDoc versus ZocDoc. So she mentioned that we have a bar that we set a little bit higher, and that we only have specialists or licensed credentialed positions in the primary care and specialty categories. What that means, if you were to go on as a patient to ZocDoc to book an appointment, you might say, I have a GI issue, gastrointestinal issue. I need to see a specialist. What you'll see is a return of about 10 options. 8 of them might be nurses, registered nurses, which no doubt provide great care. But there are very few opportunities to get directly to that specialist, which is where we stand.
Okay, absolutely. And then one more question on this. Some of the, I guess, more established competitors, those that have been around for a while, what's really stopping them from trying to copy the UberDoc model again?
Go out and get those specialists.
It's that network of specialists. Okay, that makes sense. Thank you.
The network is our moat. So moving forward to, kind of drilling in a bit more to our channel partnership strategy and what we have in contracted revenue. There are 3 agreements that we have with federal and state agencies that we are working to provide a backlog of appointments for things such as military readiness or for government benefits for employees or for service members. These are appointments that have accumulated in the hundreds of thousands across the country that there is a shortage of specialists to supply them. So again, our unique asset in our network of specialists, we're leveraging them to give them another avenue for cash pay business and servicing these channel partnership appointments. And this is where we have driven the majority of our volume in the last 18 months. The other category that we are continuing to grow and expand are through partnerships with other ancillary product and service providers. A good example is a business called Inagene. They're a pharmacogenetic testing lab. They sell They sell a kit to physicians for testing their patients for pharmacogenomic needs. They have been eager to partner with us, as many have, to cross-sell through our specialty network. So again, this theme that this unique asset, access to specialists, is giving us various ways to monetize a business. So if you think about the ecosystem in existence today, there are a number of verticals where UberDoc is attractive, both from as an acquirer, from an acquisition perspective. My last business, I grew revenue 4x in just 3 years. Underpinning that was an M&A strategy. I think what appealed to me early with UberDoc is the versatility of where we could go with this business commercially. Either going vertically through the supply chain or expanding out to the sides. You could go into things such as deeper into the data infrastructure and EMR software providers. There are businesses that we've looked at that would be a nice add-on and provide a new way to monetize our platform with our specialists. You could think of other companies that have marketplaces that align well with healthcare products and services. So should a Lyft or an Amazon, which has, have the conviction to take a piece of that $4 trillion market for healthcare services, we would be a great asset as a starting point in specialty care. So coming into the business, one of the first things that I spent my energy on is building out the core team. We have Colleen McMillan, our Chief Marketing Officer, who has great experience in both digital health, business to business, and also direct to consumer. She is leading the charge from a marketing perspective. We have Paula Muto, who is our VP of Product. She has great experience in AI-driven platforms, but also a background in public health strategy that has worked well for our product vision. And Gabby Panetta, who we brought in as our VP of Finance. He leads operations and had just exited a business in the fintech sector and has been a great addition to our core team. We also have Max Whiffen, who is our VP of Capital Markets, leading our capital markets initiatives, but also serving on the board of directors. In addition to myself on the board of directors, we have Dr. Muto, who you've become quite acquainted with, Jeff Hogan, who is a healthcare executive and policy leader who has been instrumental in opening up doors in the employer health channel. And we also have Craig Zevin, who is a veteran in the New England venture ecosystem out of Boston and provides a great perspective from his history at UberDoc, but also in being best in class and product-driven initiatives. So if you look at our cap table, we went public with the share price around 36 cents per share, still floating in that market cap of 22 million Canadian. We have close to 62 million shares outstanding, and a good portion of that set aside for options for management and key partners. But today, fully diluted, about 74 million shares outstanding. We went public just about 4 weeks ago in March.
All right. Thank you very much, Sean and Paula. Before we get into some questions, I want to get more of, I guess, a summary here. We've been through the ins and outs of this company, and we're going to get even more into a lot of questions on scale, how the company is going to grow and scale now that they're public. But Paula, summarize this all for us. A little background or summary on why this company was founded and where it's at now.
Okay, well, so I'm a surgeon. I'm here in my office. I've spent my career fixing things that are broken. American healthcare is broken, but it's not everywhere and it's not for everything. But at the exact moment a patient needs a specialist, they're told to wait months, their deductible is thousands of dollars, and their doctor is suddenly out of network. The system fails them when it matters most. So I built a fix and I kept it really simple. UberDoc is just a marketplace where patients book directly with board certified specialists. There's no referral. There's no phone call. There's no insurance gatekeeping. There's no surprise facility fees. It's just a transparent price. It's fast access, and the doctor gets paid the same day. That's quite remarkable in the healthcare system right now. But that's it. That's the whole idea. That easy. So today we have over 5,000 physicians on the platform. We didn't buy them, and we didn't build a massive sales force. They came to us because the problem is real and the solution is obvious. The CDC, the Centers for Disease Control and Prevention, says there's 860 million physician visits annually in the United States, with specialists accounting for roughly half. That's like over 1 million visits a day. At the same time, direct pay patients, those with high deductible plans, those who have tax-free health savings accounts, or simply have no patience for the system, are the fastest growing segment of that marketplace. And we are right now the only platform built exclusively to serve them. And we're just getting started. So when you think about it, growth is already happening around us. Direct primary care is expanding rapidly and needs specialty access. Employers are reaching the same conclusion. They want direct contracts, transparent pricing, and care their employees can actually use. And we provide that connection efficiently and at scale. Remember, the employers are tapped out of this system. They've reached their maximum. But here's what tells me that we really built something that works. Because the agencies that serve our veterans, active duty military, and Americans living with disabilities, they didn't need convincing. They actually came to us. They signed contracts with us. Because when you are responsible for people who already have sacrificed everything, you don't have the luxury of a broken system. You need access, you need trust, you need transparency, and you need it to work. And UberDoc worked for them immediately. So veterans, active duty, the disabled, employers seeking care, direct care. These are not niche markets. These are anchors, institutional proof points that the model actually works at scale and across populations and across needs. So I was recently appointed to the National Committee on Vital and Health Statistics, the official federal advisory board to the U.S. Department of Health and Human Services. Been around since 1949. The people advising the federal government on the future of American healthcare looked at what we were doing and asked me to be in the room. So UberDoc is not a startup chasing a trend. Policymakers, government agencies, veterans advocates, employers, physicians, and patients all have independently arrived at the same conclusion. It works, it's needed, and it's the direction healthcare is going. So I took UberDoc from an idea to a platform to a publicly traded company. I am a woman. I'm a practicing surgeon. I am one of a very small number of women in history to have ever done that. But I didn't get here by accident. I got here because the problem is real, the solution is obvious, and the market is enormous. So the doctors are already here. The patients are already searching. The contracts are already signed. The policymakers are already aligned, and the technology is already built. All we need is the fuel. So you know what they say about the best ideas? They seem obvious after someone else has the courage to build them. Well, we built it. And now let's scale it.
All right. Thank you very much, Dr. Paula. Thank you, everybody, for sending in all the questions that you have. Time to get into some of these questions. I'm going to get through as many as I can, but very active chat there. Nice to see. Let's just start off big picture. Then a lot of people are focused on growth, scaling the company. Sean, you went through a few different avenues, M&A, as well as simply building out the network. Where do you see some of the biggest opportunity here in the next 12 to 24 months, let's say?
Yeah, sure. So in the next 12 months, we're very focused on proving out the platform, scaling the small amount of patient volume that we're beginning to accumulate, and our channel partnerships. Those government contracts provide us with a really stable source of revenue as we begin to get these physicians activated in our 5,000 plus network. So focusing on doing everything we can to onboard, credential, get those physicians, delivering appointments with those channel partners. The other area that we've spent a lot of time building into is the direct-to-consumer space. So we have re-engineered our platform. We've brought in some great talent, both internally and externally, to optimize for modern-day patient acquisition techniques. And so we're going to be more aggressively investing in that consumer engine. And then lastly, building out additional channel partnerships. So we're working with other product and service providers that are doing similar things in the direct pay space that are very tangential to physician and specialist services. So we have right now a partnership underway with a very large EMR where we will be a plug-in to their marketplace and provide their physicians to click out to book with specialists directly. So these are the types of formats that we need to invest in and secure to ultimately scale this business.
Now, how about teaming up with employers and benefit providers? I believe you mentioned that earlier on. Is that a focus, I guess, tying into all these partnerships?
Definitely. So Jeff Hogan on our board is a key piece of that and really serves as a great advisor to opening those doors. We have pilots underway today to figure out how we structure our value proposition to these employers' channels. As you might know, I've been around the table with a lot of companies, point solutions in the employer space. You have to approach that very thoughtfully because you're not always in control of your destiny. The TPAs, these middlemen, they often will navigate things a little bit differently that affect your ability to be successful in scaling. So we have a pilot right now underway where I think we have a very thoughtful solution.
I think that one of the things to remember in the employer space, Cory, is that it ultimately is a consumer space. In other words, an employee might be aware that this occurs, that this is available, but then the employee has to actually, initiate the visit. So we spent a lot of time with the employers. We have a good understanding, and we also have a good understanding of employees who are actually patients in seeking care.
Okay. How about international? There are a couple of questions asking, is there an opportunity to enter Canada? I live in Canada, and let me tell you, we have many of the same problems the U.S. does. My wife, she needs knee surgery, and it's pretty much impossible to get. We need to go somewhere and pay for it. So is there an opportunity to expand internationally?
Definitely. So Canada specifically, provincially, there's legislation underway to open up that access to private healthcare services. Today, there's a bit of a hurdle that we need to overcome for Canada specifically, but definitely we are exploring health economies in the United Kingdom or in other Western markets where our services would translate quite well. We have actually driven some revenue internationally through Asia and India specifically. And so there is very much an opportunity to export this model anywhere access to care is an issue. And we can approach with our solution.
So we did pilot a program, as Sean alluded to, with India, with what they call point of care telemedicine solutions. So a specialist in the United States giving advice to a patient in India that's in a doctor's office and under a doctor's care in India. Actually, they were wonderful. They're absolutely wonderful second opinions. People who really just want to, potentially even travel to the United States, and actually one did for their care, but they just are looking for second opinions. So we did pilot that, and I like the concept of point of care telemedicine with specialists. I think that's a good solution, not just internationally, but for also rural health in the United States.
Okay, I think that's interesting too. So you don't need to necessarily build out a practitioner network in those other countries. You can use the ones that you already have and that you're building out. But that brings up the question of how do you maintain quality control across your providers? If you're building out this moat, which is physicians willing to take customers, it sounds like on a daily basis, how do you make sure that these are quality physicians?
Well, they're fully credentialed, and we do have a pretty good credentialing process. When we built this, I should say a lot of physicians were part of building this. A lot of people that were nurses, administrators, managed care experts. We had a lot of people that contributed to the foundations of UberDoc. And one of them was part of an hospital administrator that knew how you properly credentialed someone and how you would be able to maintain those credentials. So we do that. We're very active with that. Doctors are all vetted before they are allowed to come onto the platform.
Now, how are doctors presented on the platform to people when they search for whatever service? How do doctors show up first? How do you rate them?
I think it's proximity and availability. I think proximity comes first. So that a doctor 1 mile beats doctor 10 miles. Dr. Monday beats Dr. Tuesday. We're very egalitarian.
You can access a couple of ways, Cory. So today you can either go through your traditional search as you'd expect. So narrowing down by specialty, by area code, by location, and by format, in person versus virtual. So those are kind of the core capabilities that we can search by. But also you can just go into our AI triage chat feature. And as you talk about some of the issues you're having or what you think you might need in terms of healthcare services, we'll direct you to that physician's booking page through that conversation.
Okay. Question on margins then. As you're scaling, look, I understand a ton of different avenues to grow, but you would think you most likely focus on those that you see some of the better margins, not necessarily now, but later on. Where do you see some of the best margins now, plus as you look ahead a couple years?
Yeah, so definitely, if you think back to the slide that we talked about in our channel partnerships, some of those government contracts we have very good rates negotiated and ultimately help to bolster our margins. So at the end of the day, we're not most of our revenue is not driven by software as a service. So you're not ever going to see that 90+% gross margin. But when you have a starting point of 30 to 50% gross margin, you land at a pretty good place when subsidized by some software as a service revenue, you're getting to a pretty healthy 60+% gross margin. So ultimately, that's how we see the margin profile of the business moving forward.
Okay. Now, as you scale, how much cash is this going to take? How expensive is it to obtain patients, to bring in physicians? I know you won't be able to give an absolute number to that, but how are you going to balance cash as you're looking at all this growth?
Yeah, how long is a piece of string, Cory? I mean, ultimately, we're going to be scaling with what we can capture in terms of capitalization and fundraising. But really, once we start to spin the flywheel, we can inject more volume, get repeat business from the consumers in these channel partnerships, but then increase the engagement of our physician network. We'll need less and less and get to a pretty good cash flow profile in the first year or two, where fundraising might not be as big a piece of the picture.
I think that on the physician side, I think that we can scale the doctor network. We've scaled it efficiently now, right, with very few resources. And I think because it's physician-led, I think because it's physician-founded, I think because of what we're doing, we prove our model to the doctors. It's an easy sell, shall we say, to the physician network and expanding the physician network. What we're beginning to think about is that the physicians have panels. They have tens of thousands of patients. One of the interesting ways that we can get to the consumer and get to the patients is actually through those doctors, right? To be able to say to them, look, you've got to price transparency is a law. CMS is going to require you to post your prices. You're going to have to do this. So we'll manage that seat for you. Your secretaries and your office managers can deal with all the insurance hassles, but we're going to make sure that direct pay patient comes in seamlessly. So the concept of doctors telling their patients about this option so that they educate the patients, I think that is a really important tool for us, and it sort of fits into what we've already been good at.
Okay, so to that point, somebody was also asking, can you then use insurance for follow-up appointments? It sounds like you very much can. You're getting them in the door. They can handle that, I guess, follow-up appointment-wise themselves? Or does it still need to go through the platform?
No, they come in the door, and then after that, it's between the doctor and the patient. But I see a world where, doctors' practices are just so busy, and you call to get an appointment with your own doctor, and they're like, okay, I can't fit you in. And they send you down the street to the urgent care walk-in, which could cost you $300 or $400 out of pocket. Instead, you could say, go online and book. Right? We have openings online, and you can get in sooner. And I think that is really where where it's going to pivot for doctors, because patients were going to be able to say, I'm going to pay a little extra to get in because I need to get in. And I think that is how I see a lot of these practices building out, where they're using their own patients are actually accessing the platform.
Okay. Yeah, healthcare is a little bit of a mess, hey? One quick question then, in terms of guidance. Now that you're public, are you going to be able to release any guidance in the near term?
Not in the next couple of months, but we do think that it's important to get to a point where we're building momentum, have some analyst coverage, and we can focus on guidance. So it'll be a few months.
Okay, final question then. We are almost out of time here. Thank you, everybody, for tuning in. And again, if I didn't get to your question, I'm going to save that for future calls with the team at UberDoc. Talk to us about the milestones that investors or those watching the company now that you're public should be looking for.
Yeah, I think without giving guidance financially, I think some of the things that you can watch for are related to our growing network of physicians. So getting more physicians on the platform, but also getting them activated. So making sure that we're driving appointment volume to them, and then going to metrics that relate to bookings, appointment volume. These are the types of things that you'll see numbers start to scale very quickly as we invest in avenues to continue to scale the business.
Okay. Everybody, thanks for tuning in. Again, that's been Sean Kearney, CEO of UberDoc, as well as Dr. Paula Muto, founder and chief medical advisor, as well as the chair of the board. Company has just started trading on the CSE under the symbol APPT. If you want any more information on the company, visit the UberDoc website. Again, you can email me, send me any questions you have. I will be having the company on my show, the KE Report, to keep everybody updated on the progress that UberDoc is making now that they are a public company. So, Sean, Dr. Paula, thank you very much for your time during this webinar.
Thank you, Cory. Thanks, everybody, for tuning in.
Thank you.